everyone, it's Minesh Bhindi from Gold and Silver for Life, and today I want to uncover one of the biggest myths that's costing gold and silver investors a lot of money. Whether you're investing in bricks, bars, coins, having your gold stored, this one thing is costing you a lot of money, and the myth is being exploded by gold and silver bloggers, bullion dealers, and all of the like that you see on the internet. And I want to uncover this for you today and actually show you what the real profit and what the real potential of this is, and to show you that it's not actually as risky as what most of these people are saying, especially when billions and billions of dollars are actually invested in these methods. Of course, what I'm talking about is investing in gold and silver physical versus using ETFs. Exchange traded funds, oh, the big risky exchange traded funds. We're going to uncover all of these myths. I'm going to show you actually how safe they are. I'm going to show you actually what amount of money you can make. I'm going to show you why, in certain circumstances, after you've got enough physical in your portfolio, it actually might be better for you to invest in ETFs than anything else. Why? Because you can generate a cash flow. You don't have to wait for the price of gold and silver to go up. So let's dive deeper into these two ETFs that are the biggest gold and silver ETFs out there, GLD and SLV. So these myths are so important to bust, because by not using these amazing tools available to investors, you're costing yourself so much money. And one of the best tools out there to invest in gold and silver is GLD, which is an ETF where it's the first ETF where it's completely backed by physical gold. You buy a share in the ETF, and then that represents your share of the fund's holdings, and the fund's holdings are gold. But what a lot of people do is they make it look like this isn't a real thing, even though there's $34 billion of assets the day that we're filming this in this fund. And it was started on November 12th, 2004. It got to $1 billion in assets in under 3 days. So this is a real thing. And a lot of gold and silver bloggers and bullion companies sort of try and make it look like this isn't a real thing. And you know what the secret is? Here's why they're making it sound like that. Because the fee is 0.4%, and that's it. So they can't charge you their 4, 5, 6, 7, 8, 9, 10, and all the way up to 47% fees for their gold and silver that they want to peddle you. And so this is such a good way of investing in gold and silver that there's all this fear-mongering going on. But all the smart investors, $34 billion of assets worth of smart investors, are investing using these tools. And let's have a look at a couple of things. So the way I like to assess some of these things is by breaking a fund up into 3 sections. So the assets, the sponsors, and the auditors. And I think that's a key way of understanding how this actually works. Let's have a look at the assets first, right? So GLD, how it works is the price of GLD per share is 1/10 of the ounce of gold. And all the gold is held in London good delivery bars. And it basically, GLD tracks the price of gold net of these expenses for managing the trust. Very, very simple, right? And how it works is when you buy a share, you basically own a percentage, or a 1/10 of an ounce of gold. That's the primary asset within GLD. Then we have a look at the sponsors. Who actually started GLD? Who are they? What do they do? Are these just small companies? Are these just small crooks? Like, you know, somebody set up a bullion dealership and tried to set this up? No, these are big sponsors. So we're looking at the World Gold Council actually started the GLD. They actually sponsored it. They actually went forward and actually put this into action. Then the trustee of GLD is Bank of New York, pretty big bank. Then the custodian is HSBC London. So the gold is actually stored in London. Nobody knows where well, obviously HSBC knows, but it's a very, very secure location. All the gold is stored in London. And then how it's audited. So that's where it's stored. How it's audited. Let's have a look at the number. You know, one of the biggest myths out there is these things are not audited, and we don't know how much gold is in any of these things. The truth is that Deloitte audit Bank of New York, which is the trustee, they audit their data to make sure everything's right and the gold is right and everything's right. Once those 2 audits are done, Inspectorate International, which has been doing this since 1927 and not lost a gold bar since 1927, Inspectorate International go and audit everything that Deloitte and BNY did. So you've got 3 companies here auditing the actual gold, and you've got HSBC as the custodian that's responsible if any of the gold goes missing, and there's $34 billion of assets trusted in this structure, and if all of that fails, you've got the arm of the SEC actually monitoring all of this to make sure that everything is right. This is one of the most, this is more secure than buying gold from a website and having it delivered to your house, because it might be lead underneath that gold, that initial gold covering. So the way this is structured is it makes it beneficial for all of these companies. It's in their interest to make sure that this is secure so that more assets go under management and they make more money. They make 0.4% of the holding. That's how GLD works. And if you want to get any of this checked, by the way, to see whether I'm talking rubbish or not, it's all public. You can have a look at spdrgoldshares.com, and everything, including all the audits, are completely public for you to have a look. So the other thing that I wanted to mention was that, GLD, there's 27.3 million ounces of gold held in GLD. This is not some small setup, and that's what most people, these bloggers, these people that have an agenda to sell you physical gold because they make 10% on the actual physical gold, this is what they want to try and make GLD out to be, that it's some sort of setup by someone sitting in their underwear at home and holding the gold in their closet. It's not that. This is a lot of gold. This is a lot of money that's being held. Now that we've had a look at GLD and gold, let's have a look at the most prominent ETF for silver, which is SLV. So again, we're going to use the same structure to analyze SLV. Firstly, it was started April 21st, 2006 on the success of GLD. It has $5.4 billion in assets. That's 325 million ounces of silver, and the fee is 0.5%, not your 7, 8, 9, 10, all the way up to 47% that physical gold hawks want to try and sell you. So how it works is the assets, again, one share is equal to 1 ounce of silver. You basically own a share of SLV, and that gives you the value of the actual asset is based on the amount of ounces of silver that are inside of SLV. And so basically 1 share equals whatever 1 ounce of silver is worth. And the cost, again, is 0.5%. Very simple. Let's have a look at the sponsors. BlackRock Asset Management started this. Big asset management company, not some small fly-by-night organization that was set up. Then the trustee is, again, Bank of New York, and the custodian is JP Morgan. These are pretty big firms that are under some pretty big amounts of scrutiny, and so this is more secure than just buying physical gold and silver and storing it under your mattress, especially when you don't get the physical gold and silver tested to make sure it's not just lead. How that works now, just to make sure that all of these guys are doing their jobs right, then you have the auditing side of it, okay? So the auditors are PricewaterhouseCoopers, which I'm sure you've heard of, a pretty big firm. They audit Bank of New York. Bank of New York, as a trustee, does the audits. PricewaterhouseCoopers goes in and makes sure that Bank of New York is right. And on top of all of that, Inspectorate International, who has not lost a bar since 1927, goes in and makes sure that what they've done is right. All of this happens to keep safe $5.4 billion of assets for investors at a low fee of 0.5%. This is a really effective way of investing in gold and silver, especially if you want to hold for the long term, because it allows you to cash flow your gold and silver. That's what we do. That's what we've been doing since 2010, me personally since 2008. If you want any more information on this specific fund, you can go to blackrock.com and search around, and you'll find all of it publicly available, including the audits and everything else. So any of these lies that are being spread about these ETFs is just complete rubbish, because all of this is available online, and there's so much money involved here that the amount of people watching these things, it's unbelievable to see how some of these risks that these people, these bloggers have dreamed up could actually come to fruition. So go and do the research on SLV, but that's the prominent one for silver. So now that we've had a look at these ETFs and how safe they are and how much money is actually invested in these, let's have a look at some common myths about these things and common rumors and fears that are spread by these bloggers online and bullion companies and things like that. Firstly, number one, you can't redeem the physical with an ETF. Listen, there's 2 goals for gold and silver investors. Number one is to profit from the price exposure of gold and silver based on what's happening in the economy and what's happened throughout history. That's number one. Number two, the other alternative goal might be that when electricity stops and the zombies are walking the street, you need gold and silver to buy stuff with. So you've got to balance out which side of the coin that you are on in order to make an accurate assessment of what needs to go into your portfolio. If you are on the side of just wanting to make a profit based on the price exposure, like any normal investor, you want to invest in gold and silver, as soon as the cycle's over, invest in something else and ride that cycle, ETFs are a great way of doing it. If, On the other hand, you really believe that electricity is going to stop, all money is going to stop around the world, zombies are going to walk the earth, and you want the physical gold in order to buy bread with, then none of this is right for you. You need to buy the physical, and you need to go ahead and put 100% of your money in the physical. See me, I'm more of a 95% first option, and 5% maybe zombies might walk the earth. So what I like to do is put 5% in physical. Everyone should have some physical. You should 100% have some physical bought through a trusted dealer, someone you know, someone who you know is not going to sell you lead, and that you should have physical possession of that a little bit. The overwhelming majority, however, you can invest using ETFs because it makes it simple. You can travel, you can do everything without having to have the gold stored somewhere safe, without the worry of someone breaking into your house and stealing your gold at gunpoint. So ETFs are a great way of doing that. They provide a great security, and most importantly, they allow you to cash flow. So this is all just rubbish, because you shouldn't want to redeem physical by using ETFs. That's not the goal of these things, but they always try and use this distortion field to make you think, hey, you can't do that. The truth is, you don't want to do that. You just want to profit from the amount of money. It's like buying a stock, right? You buy a stock, as soon as it goes up, sell, and get into another stock that's going up. That's the overall wealth cycle. That's the overall goal of the wealth cycle. Next one is third-party risk. So this is a great illusion as well. So they say there's a third-party risk. Firstly, there's a third-party risk with every investment, because if you buy gold from one of these gold and silver bloggers and they mail you lead covered in gold, or more importantly, they store it for you, because this is a whole new money-making scam right now, we'll store your gold for you. What if there's no actual gold within that vault that they're storing for you? What if they're going to shut the thing down, run away to Brazil with all the money that you've given them, and there's no actual gold in that vault? So there's always a third-party risk firstly. But the thing I want to mention about third-party risk is there's third-party risk in a bank account. You know, in fact, the third-party risk in a bank account is higher than the third-party risk in an asset account, in a broker account, or something like that, where you own assets. Just ask the people of Cyprus, who over 100,000 euros got a 40% levy on their bank account. So number one, there's always a third-party risk. Number two, you've got to really look at what the third-party risk is in these ETFs. And really, with the amount of audits and everything else going on, the third-party risk is minimized as much as possible. So third-party risk, rubbish. Price manipulation. Price manipulation is one of those things that, you know, people like to spread around just to scare people into it, right? So, oh, you can price manipulate using these ETFs and things like that. When you look at the Chicago Mercantile Exchange numbers, what they actually show is that futures trading is 10 times more than ETF volume on a daily basis. ETFs are bought by people who want to invest in gold and silver, want to invest for the long term, want to put their money into gold and silver, and want to actually have that there rather than taking possession of $200 million worth of gold in their offices, right? Whereas what's used to manipulate, if you want to call it that, because every market has one of these mechanisms, are the futures contracts, right? The futures contracts is what's used, and you shouldn't use a futures contract if you want to actually have exposure in gold and silver. So price manipulation, and again, another illusion. So the other thing that we hear all the time is these are not audited, these funds are not audited. Well, I put out this report a few years ago, which I'll put the link to in the description so you can actually get the full report. You know, we hear all the time, these are not audited, they never allow third-party auditors. Well, I showed you how many times they're actually audited. And then most importantly, if they're not audited, how do you explain all of these actual links to public audit data that's out there available for everyone to look at? So these rumors and lies that are spread are crazy. And this is one of the most prominent gold and silver advocates out there put this out, and they said, while these funds may provide significant trading liquidity, so he acknowledges the benefit of these things, its physical gold and or silver holdings remain questionable and unaudited. What a bunch of bullshit, because the truth is they are audited, it's public. The only reason he's saying that is because he actually sells physical gold and silver. So you've got to look at the agenda behind what everybody's saying. And so, not audited, complete rubbish, because you can go and actually find out the audits, you can read them, you can have a look at every single bar audit on the internet through all the different websites that I've already mentioned. So it's just absolute rubbish. These are the safest ways to invest in gold and silver after you have your minimum physical storage, and they're the cheapest, most cost effective, and most profitable, because then you can use a strategy like what we do at Gold and Silver for Life to generate a cash flow on these things and make 12 to 26% a year. So one of the other biggest myths that are out there is, trust me, I'm a blogger, right? And one of the reasons why they always talk negatively about these ETFs is because of actually how good good they are and how cheap they are. And so what I want to do is I want to share with you a comment that was on a video that was posted by one of these bloggers that also sells physical gold and silver. And it was a comment by a client of his on the realities of following that methodology. So I want to read this to you, and it's pretty telling of actually what the cost and the real costs of trusting these services are versus using a proven institutional service that's out there that, you know, hundreds of people that invest millions and billions of dollars are using. So he says, in May 2012, I joined the program at, and I'm going to blank out all the URLs and everything else because I don't really want to get into that, but I just want to show you the actual impact of what this is, right? He says the minimum buy-in was 20 ounces. For this, we were supposed to receive their timely forecast of when to sell your holding at the peak. Let's see how this has worked out. Number one, I was a true believer and bought 60 ounces at $33.13 an ounce for a total of $1,988.21. Number two, there was a monthly storage charge for the very, very low price of $35. Just think about it, $35 just to store this, right? So multiply 35 by 63 months and you'll get a holding price of $2,205. So the storage already cost me more than the actual silver purchase. This is why this thing is a scam, and this is why they always talk about this, and they always talk negatively about ETFs, because they want to be making so much money on actually selling you the physical gold and storing it for you. And he says, so the storage already cost me more than the silver purchase, but wait, how much is the silver actually worth today? At $17.30 an ounce at the time of his comment, ignoring the spread around the spot price, the silver is today worth $1,038. So to sum up, if I sell the silver today, I'll lose $3,155.21. That's why trusting a blogger, buying physical gold, doing supposedly all the right things that you're supposed to be doing with gold and silver, and not using the advanced institutional methods, he's going to lose $3,155.21 today based on that decision. And he says, so I guess this is what the biggest wealth transfer in the history of mankind looks like. And it's so true, because some of these guys are charging, you know, 30% premiums just for the physical gold and silver. And that's not including the storage charges and things like that. He says, alternatively, to break even, the price of my silver would have to rise to $69.88 an ounce. Can you imagine that? $69.88 an ounce just to break even. And he's not doing that. It's not like he went in and bought at the wrong time. He's bought at the right time. The price was right. Everything was right. This poor guy has basically been paying $35 a month for storage, right? And that's what's bumped the price of his average price of his silver up. And it's just shocking how much of this actually goes on and how people are targeted by these bloggers because they make so much money doing it that way. Whereas using ETFs, using institutional methods to do it, you're not doing that, and you're able to generate a cash flow from gold and silver, which is what we've been doing since 2010. And he says in 2008, when Armageddon was knocking on our doors and everything was buy, silver barely reached $50 an ounce. I guess all I can say in conclusion is a sucker is born every minute, i.e. me. And he said, P.S. still waiting for that all-important insider report of when to sell at the peak. You know, I feel so sorry for people like this, because the truth is, if you do it like an institution and you do it like the smartest investors in the world that are investing billions of dollars, here's what the reality should look like. You should be investing in gold and silver to protect your portfolio, and you should be generating a monthly cash flow while you wait for that gold and silver to go up. The way that I've been doing it all this time allows me to own gold and silver and make 1 or 2% a month every single month until the gold and silver goes up. So effectively, if you had been following the way that I do it, you would have been selling, your gold and silver would have been at zero in terms of net cost. So it's very, very important that you look at and research the right way of doing things. Don't just get suckered in based on what's scary and what's not scary. Be an investor, do it the right way. And if you want to get a free copy of that report that I put out years ago to let people know of these risks, then just click the link in the description box. But the main thing is, you know, you are investing in gold and silver for the security of the value of your money. This is going to depend on your whole family's future. Everything is going to depend on how you invest. And if you get suckered into these schemes by bloggers online and don't follow the trusted, proven institutional methods of doing it, you will cost yourself a lot of money, just like this poor guy has. So I just want to say, don't believe the bullshit, and invest in gold and silver the right way, and the way that allows you to make the most amount of money, because that's what you want. You want to make the most amount of money. All right, take care. I hope you understand now why gold and silver ETFs are pretty safe, how they're audited, how they're studied, and how they're monitored. And I hope I've managed to open your eyes into looking at potentially a different way to invest. Take care. This is Minesh Bhindi from Gold and Silver for Life. Bye.